Some very interesting numbers coming in from Reliance Jio. Now, the company on a broader level, that's Reliance Industries, and let's not forget its legacy business of energy, missed estimates for the first time in 9 quarters. But of course, the big surprise was Jio, the telecom arm, turned EBITDA positive in just 3 months since its commercial launch. Somit standing by with details on both businesses, that is the legacy business of energy and as well as what happened with Jio. Somit, it's over to you.
So I'll start with the standalone business first. The net profit came in at 8,265 and it missed the street estimates for the first time in the last 9 quarters. The core number, that is the gross refining margin, was at a 9-year high of $12 per barrel, but below analyst estimates of $12.5 per barrel. Now, the petchem business was the star in this quarter, with EBIT margins coming in at 17.7%, while revenue rising around 10% sequentially to 28,000 crore. Now, the biggest surprise came in from Jio. That is the telecom business of the company. Now, it reported a gross revenue of 7,200 crore. ARPU came in at 156, which is the highest in the industry, led by higher data consumption. Now, if you see the data consumption for the company is 9.6 GB per user per month, while that of Airtel, that is a top player in the industry, is around 2.6 GB per month per user. So, what led to this? Now, Jio's ARPU of 156 does not only include the Prime membership fees paid by the subscribers, but also the recharge done for the promotional offer in the earlier months. Now, along with this, it also includes the second recharge done by the subscribers for the promotional after the promotional offer ended. Now, coming to the cost side, the company chose to charge depreciation on a unit cost method, which kept the depreciation low at around 3% of the total capitalized asset. Now, along with this, the company has also capitalized some of its employee expense and its interest cost expense in the second quarter of financial year 2018. Now, the average tower rent for the company was less than half of what the industry average tower rent is, and this is due to the in-house towers and power and cost efficiency that the company got in this quarter. Now, the key takeaways from the analyst meet of Reliance Industries is that the ROGC project, that is the refinery of gas cracker project, did not contribute anything in the second quarter, and it will get full benefits of that project in the third quarter. Now, the management is also expecting the refining margins to remain strong in the third quarter, led to the supply constraints in the international market. Now, coming to the capital expenditure side, in second quarter, the capital expenditure for Jio stood at around 7,000 crore, that is the 44% of the total capital expenditure of the company. And going forward, for Jio, the capital expenditure is expected to remain high, but most of the capital expenditure for Jio would be done in financial year 2018. Now, the management also said that they are going to revise the tariff plans, which would support the ARPU, and they're expecting that on a Q-on-Q basis, ARPUs would not fall. ARPUs mean the average revenue per user. Now, the company is also saying that the current spectrum portfolio of Jio is self-sufficient and they're not in a constrained position as of now. Now, finally, after the results, the analysts also turned bullish on the company. Now, most of the analysts have either upgraded the stock to a buy rating and have also hiked the target price. Now, IDBI upgraded the stock to buy rating with a target price of 1,004, Motilal Oswal with a buy rating and a target price of 1,005. Now, IDBI has raised the EPS estimates by 6% for FY 18 and 19 on the back of strong petrochemical performance, and they're expecting the GRMs for the company to be at $11 per barrel for the second half of financial year 2018 and for financial year 2019. Now, Motilal Oswal has also upgraded the stock, and they're expecting the Q3 and Q4 ARPUs of Jio to be around at 142 and 163, and also they're saying that the company would add around 4.2 crore subscribers in the second half of financial year 2018.
Okay, Somit, a couple of points here. I think, let's go back to your previous slide where you brought up
the depreciation part, I guess.
Well, no. Before we get to the depreciation part, I just want to bring up the total number of subscribers versus the revenue that they've clocked this quarter, right? So I think the slide that showed the revenue comparison between Reliance Jio and the first quarter numbers for Airtel, etc. So we have what, 281 million Airtel subscribers?
Yes.
Reliance Jio is less than half at about 129 million.
I guess 14 crore. That's 13 points.
So just look at gross revenue, right? Gross revenue is 7,213 crores.
That's because of the ARPU, I guess.
Yeah. So I mean, you're looking at a higher ARPU of 156. But is this purely a second quarter ARPU? Is this influenced by anything else? Is it influenced by the many free offers they've given? Can you give us some explanation, some insight into how analysts are looking at this ARPU and why they think it stands to decline in the third quarter?
See, in the second quarter, first, the company had introduced a promotional offer of 303, which said that for the first 3 months, that is from, suppose I take the plan on 1st April, for the first 3 months, that is from 1st April to 30th June, the offer would be free for me, and the 303 rupees that I'm paying for the offer would kick in from 1st July for the next 28 days. So if you see that I have done the recharge in first quarter, but my recharge is being effective from the second quarter.
So they've accounted for it in the second quarter.
Exactly.
No, but this ARPU figure of 156, why is this likely to decline in the months to come if they expect customers to continue recharging at the same level?
So analysts are saying that it might decline, but the company is very positive, and they are saying that on a Q-on-Q basis, ARPUs would go up. And why analysts are saying it would decline is because if you see the 303 plan that is there, it is effective for actually 4 months. That is the 3 free months and the 28 days that I'm getting after that.
Right.
So that's the reason why they're saying that ARPUs might decline going forward.
So I just thought that was the most outstanding number, 156. Compared to what everybody else is earning, which is substantially, well, not substantially lower, but definitely lower. And given that these guys have been around for donkey's years, to think that Reliance in just a few quarters has managed to do such a high average revenue per user, and look at the data consumption that they've managed to see in the market.
Almost 4 times.
Yeah, that's 4 times the average. So it's interesting. The numbers just suggest that maybe they've gotten something right, right? In being able to read customer behavior, say I'll give you free or very cheap data and I'll see how much you can use. And once you get used to it, you're never going to ever leave me. So I think that was one of the most noteworthy numbers that we got. And this is exactly what we've been waiting for, the ARPU number and the data consumption number. The other thing, and this is the positive in the numbers, the one that was eyebrow raising is the depreciation number. Yes. I'm sure you've spoken to a bunch of accountants over the weekend. I have as well. Let's get a little bit into how they've managed to show such a low depreciation number. So
the thing is, they charge depreciation on a unit cost method. But the industry, that is what industry, I mean Airtel and Idea, they charge on a straight line depreciation method. Now, if I have an asset of around 100 rupees and I'm thinking that it would depreciate over the 5-year period, then I would charge 20 rupees.
Every year?
And every year for the next 5 years. And if on a unit cost method, I'll see how much capacity has been utilized, and on that basis, I will charge depreciation.
Yeah. So there are 3 methods, I think, as all accountants will tell you, and you guys would know as well. There is the written down value method, that's the straight line method, and there is now the per usage cost method that is also available. This is all under the Companies Act 2013. Effectively, you can pick the method that best suits your assets within the bounds of the law. And what they've chosen is to account for on the basis of the per usage method. So if you've got spectrum for 15 years, but you're using, just to give you an illustration, but you're using only a certain amount of it right now based on your subscriber data, you're only depreciating that part of it, you're not depreciating all of it. This is different from how the other telecom players do it. So they do it on the straight line method,
yes. For 18 years, if it's a spectrum asset, it's valid for 18 years, so they divide it over 18 years equally.
Yeah, so how you account or how you depreciate intangible assets is the question here. It's mostly to do with intangible assets, because from everything else like, buildings and property, etc., that's all pretty well defined in Schedule 2 of the Companies Act. So I think it's only this intangible asset depreciation policy that's raised a few eyebrows. I mean, I think that's all we can say. It isn't incorrect, it isn't wrong, it might be seen as aggressive by some people, and it's definitely different from what some of the other players are doing.
But if you see, if going forward, if the capacity utilization is more, the depreciation would be more.
Yeah.
So it's not accounting-wise wrong. They are free to choose that.
No, nobody's suggesting it's wrong. We're just saying it's different.
Exactly.
Yeah, I think the interesting thing here is it's different, which is why they've been able to show a very low depreciation charge in their first commercial quarter and actually the financial year second quarter numbers, as a result of which they've managed to show an EBITDA positive number in so short a period of time. And I think that's really the trick.
And that is where actually the analysts also got it wrong. And that's the reason they were expecting a higher amount of loss, and instead the loss amount is very low at 270.
So are there any analyst comments on the entire depreciation?
They have revised the estimates on the fact of this new accounting method that Jio is going to follow, and that's the only thing that has come in.
It'd be interesting to see how the other telecom players respond to this depreciation method. That's one. And secondly, the numbers can only get better from here onwards, because don't forget, the TRAI's change in interconnect charge policy kicks in, as a result of which Reliance's costs can only decline.
Paid around 2,200 crore in this quarter, and if you see if it has come down to half, so if assuming the same call...
So it's gone from 14 paise to 6,
6 paise. So the cost would come down to what, 1,000, 1,100?
So that's another 1,000 crores that will get released towards profitability. And I think that means that the subsequent quarters from here on, the numbers will keep just looking better, except for the depreciation charge. So as they utilize more and more of their spectrum and other intangible assets, they're going to have to depreciate a higher amount. So we'll see how it happens. But at least for now, this has been a big, big positive surprise, and it can only bode very well for the stock this morning. Interesting to see how the other telecom stocks will react, but very, very good news for those who are betting big on Jio.
Yeah, and then the core business for Reliance, non-Jio, the capex is coming to an end.
Yeah.
So that should also contribute to Reliance profits going ahead. I mean, I'm just saying from a stock perspective, it's in a sweet spot, so to say.
Now, we've been a little disproportionate in our conversation today, given that Jio is such a small part of the overall Reliance Industries business.
But that is what has been driving the stock for the last, I guess, year to date, I guess.
Look, everything else in Reliance Industries, from the GRM point of view or otherwise, is a well understood, phenomenon.
True.
A bit surprising that they didn't meet the GRMs that we needed, that everybody thought that they would. But that's hardly going to be the disappointment that's playing on the stock today. It's all about Jio, and it'll be interesting to see how that stock does today.